In this video, I'm going to show you exactly what options I sold, rolled, closed, and how much I transferred to my bank account in the month of January 2024. That's right, welcome to the first installment of What Were My Options Trades Last Month. As I'm sure you're aware, the market ripped higher in January, and so I played it safe with my option selling, but it turned out to be a decent month and a solid start to the year. I've got my option selling all consolidated into the Robinhood platform now, and it's a new month, a new year, a fresh start. So let's see what I did and how much I made in January. This is my Robinhood account where I'm trading options. It's around $158,000 account value right now, and selling options is pretty much all I'm doing here. I'm running the wheel strategy on various underlyings, mostly on index funds, and I'm also collecting interest on idle cash. I'm earning 5% on my idle cash at Robinhood with a $5 per month Robinhood Gold subscription. And I have a good amount of cash hanging out in this account, so this interest is also adding up. But let's take a look at these options trades. All right, first trade was on QQQ. This was the first trading day of the year, first trade of the year, and a blank spreadsheet is a very exciting thing, and I was excited to get this first trade on. I sold the cash secured put on the Qs, and the Qs are a little more volatile than SPY, which is the index I normally sell options on, but QQQ is one that I still wouldn't mind owning long term if I have to. So I went ahead and sold a cash secured put on QQQ, opened it on January 2nd. I was filled at $3.60, and then I rolled it out an additional 6 days for another $1.11 credit. That's $4.71 total credit that I received. I closed it early 8 days later on the 10th for $2. That was a $271 profit in 8 days, $33.88 profit per day, and a 31.30% annualized return on capital. The next trade was on Apple. This was another cash secured put, and I no longer sell puts on individual stocks except for when I do, apparently, because I sold this cash secured put on Apple. This was also on the first trading day of the year. I think I was a little trigger happy on this one. The annualized return on capital wasn't great, so I wanted to shut it down basically right after I sold it. So I opened it on January 2nd, filled at only 33 cents, and then rolled it out a week. It's not noted on my sheet, but I did roll it out a week to get another 70 cents credit that you can see here, and that's $1.03 total credit that I received. I did manage to close this early for 90 cents for a kind of silly $13 profit and a lousy 4.65% annualized return on capital. Seriously, I would have been better off doing nothing instead of putting on this trade. I could have earned 5% on that cash just with Robinhood interest instead of selling this put. Oh well. All right, the next one was TLT. This was a covered call on TLT. I was assigned 100 shares of TLT at a $100 strike price. This happened months and months ago, and I kind of want out of these shares, so I've been selling calls against them a little aggressively, either right at this price that I was assigned of $100 or just below it in this case, picking up a little premium here and there, and also collecting the interest that TLT pays each month. So in this case, I sold the 100 strike price covered call for 35 cents and then rolled it out and down a strike, down to the 99 strike price for an additional 15 cents credit. And I ended up closing this trade early for 2 cents credit. No sense in keeping a trade open when it gets down to 2 cents. All right, next trade, I was back to the Qs. Another cash secured put on QQQ. This one I did on the 11th and it expired on the 9th of February. Same strike as before, the $395 strike price. I sold this on the 11th and received $3.21 credit. QQQ popped back up that very same day and I bought to close it the same day for $2.50. That was a $71 profit in the very same day, and an annualized return on capital of 65.61%. Very nice. Another very short trade though, in and out, and just back on the sidelines waiting for the next opportunity. Next trade was TLT, another covered call on those TLT shares. This one I sold on the 12th. It expired on the 26th. I sold the call once again at the $100 strike price, picking up 20 cents of credit. I closed it 5 days later when it got down to 3 cents credit. That was a 12.41% annualized return on capital. Nothing too special or exciting with that one, but I got to keep on selling these covered calls because I've got the shares. I mean, they're just sitting there and I'm not really interested in hanging on to these shares either. The next trade I did was on SPY, my old buddy SPY. I sold a cash secured put on the 16th. The reason was that SPY was down in the morning, and so I saw a chance to sell a cash secured put on SPY finally, which I did at the $470 strike price for $1.27 credit. And I closed this trade on the same day, again, when SPY's price popped back up and I got out quickly. I bought to close at 80 cents. And that was a quick $47 profit in a morning, basically. And that's a 36.5% annualized return on capital. You see, if I get big moves like that the same day that I sell the put, I have no problem buying to close. There's no sense in waiting around for something to go wrong. When the option falls in value so much quickly, to me it just makes sense to take advantage of that, buy to close, and get out and wait for the next opportunity. All right, the next trade I made was on Apple, back to Apple. This one made more sense than my first Apple trade. So on the 16th, I sold a cash secured put that expired on the 9th of February. I sold that at the $175 strike at, that was a $1.70 credit that I received. And then I closed it just 2 days later when it got down to 88 cents. So this is another example of the price of the option falling very quickly and me getting the F out. I bought to close this option 2 days later for half of what I sold it for, and I made a quick profit of $82. And that is, get this, an 85.52% annualized return on capital. Don't I wish I could just do this trade over and over again? All right, the next trade was a cash secured put back on SPY on the 17th. This expired a short time later on the 24th. I sold a cash secured put, the 466 strike price this time for $1.50 credit, and closed it again the very same day for $1.25 for a quick $25 profit and a 19.5% annualized return on capital. Next up was another covered call on TLT. Sold this one on the 19th with a 2/16 expiration date. I was aggressive here and sold the $99 strike right away. That's $1 below the price where I was assigned, but that was a long time ago. And anyway, I still only received 25 cents credit for this call. And that trade is actually still open. I will look to close it when the price gets down to the single digits, or if the price of TLT goes up enough, I might consider rolling, or more likely just let it get called away if it goes up enough. And my last trade of the month is back the way I started it to QQQ. I sold another cash secured put, this time at the 415 strike price. I did this on the 25th, and that one had an expiration date of the 31st of January. I sold that put for 91 cents credit, and once again, bought to close it the very same day. I bought to close it for 71 cents credit, so this was another very quick profit, $20 and a 17.59% annualized return on capital. So those were the trades for January, and the theme seemed to be short trades, quick profits, and holding out for bigger opportunities in the future, which have not arrived yet because the market has been just so bullish this entire month. But that's okay. When the market is bullish, my buy and hold portfolio over there is benefiting. And anyway, I still managed to pick up some nice premium on these options that I did sell, which I've tracked here on my spreadsheet. And if you want to use this same spreadsheet to track your own options trades, I'll link to the video about it here and also down in the video description. So for January totals, I had a profit of $594 in options premium, and then another $25 of premium on TLT that is still open. And then there's the interest that I earned in this Robinhood account as well. I earned over $511 on my idle cash in Robinhood this month. I mean, that's almost as much as I made selling options. Anyway, if you add up what I made from selling options to what I made from interest, That is over $1,100 this month. And I transferred out $550 of that out of Robinhood into my checking account this month, which represents most of the options income. Most of the options premium, I ended up just transferring right out to my checking account, and that was $550. That still leaves a little bit of buffer, plus there's the interest that I've earned, so I'm growing this account very slowly as well, but I'm also transferring out most of the premium that I receive as income, and really treating it like it's what it is, which is income, and sending it right out to my checking account so I can spend it or do whatever I want to do with it, just like I would any other income. All right, those are the trades for January. I'm happy with these results, especially considering that I really restrained myself from trading too much. I didn't stay in any of these trades for very long at all, and I tried to remember that I didn't need to do too much because my buy and hold portfolio was doing so well. Now, if you're interested in using any of the option strategies I've talked about in this video, selling puts, selling calls, the wheel strategy, check out this video where I share my thoughts about who should and should not trade the wheel strategy. You know, they say that when you're holding a hammer, every problem looks like a nail. Just because you know how to trade the wheel strategy doesn't mean you should.